Hey guys, welcome back to the channel, welcome back to a new video, and today is going to be a little bit different because we are going to discuss what a potential bottom, where and when for BTC could be. And today we're only going to look at the higher time frames, and I'm going to show you a few very interesting comparisons and some data from the past that could signal a possible bottom for BTC. Before we go to dive in, as always, I'm going to ask you to smash the like button, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful. Also feel free to check out the links in the description. There's a link to my Twitter and Instagram. Feel free to follow me there. There's also now a deposit bonus on Bybit and Phoenix. If you use our links after your initial deposit, you will get the trading bonus. Alright, let's dive in, and like I said, we are only going to look at BTC USD, and we're here on the weekly, and we're only going to do the big time frames. So we have been dumping down tremendously already from 66k, and yeah, then the question is, of course, what a lot of people are asking, is the bottom in yet, or are we going much lower? Is 20k the bottom, or 10k, or 15, somewhere in the middle, or even lower than 10k? There are all kinds of crazy prediction right now. Well, usually when we have such a major events as in BTC dumping down so much, or in this case, if we're looking at the world economy stage, we're in a high inflation. Stock markets for 6 months ago had an all-time high. Real estate is going through the roof. We have just these crazy ingredients right now in the economy that could cause major shifts for the next couple of years. Then I always like to zoom out and look in the past. What have we seen in the last few decades? Now, of course, BTC is not so old, so we only have a little bit of data from the past. And then I'm seeing a few interesting things. So what I'm then always say is look to the left, and what I mean with look to the left is look here in the chart to the left in the past. What have you seen so far? There are a few scenarios and there are a few calculation methods to think that we almost hit the bottom. Now let me set the record straight. I am not claiming to find the exact price level and the exact day to say, hey, this is where we're going to bottom out, this is the exact price, because on these levels a wheel could just dump or pump the price a little bit and you're up or down easily with $1,000, where that of course is a little bit different when the price is at 66k. So yeah, we could easily dump down a little bit more, a little bit less. If you have been following the channel, then you know that I'm always have said sub 20k, so somewhere between 20 and 25k. That is kind of my target, and the reason why I always said that is also what I'm going to show you today. First thing I want to show you is the regular RSI. I will later on remove this, and we'll show you that why we could be topping out from a historical point of view. This is again the weekly. We're seeing that the RSI all the way on the left side of the screen is right now at 27, so we're reaching those oversold territories. Now on the weekly, that is low. Matter of fact, if we go back in time, then we saw here an extreme low of 29. This was in December of 2018. That was the absolute bottom of the bear market. And if we go down here, then we also have a low of 27.5 on the RSI in 2015. And we also had just a little bit before on 30. And this is too far back, it's all the way in 2011, so that data is not very reliable. So just from the RSI point of view, you would say maybe a bottom or a temporary bottom is in. This is number one. Let me take this out of the screen because I'm going to show you later on what I mean on the market side B indicator. The second thing is that we have this thick blue line that you have probably already seen on the internet or my previous videos. That is the 200 week EMA, and that is kind of hoping right now, don't know for sure, maybe a support. As a moment of recording, we are just trading below, but we still have 5 days on the weekly candle, so it would be nice if we could close at or above that 200 week EMA. If we zoom back to the past, then we can see that here in 2020 This has been support and resistance. We just closed underneath, and the week after we went right away higher, and yes, intra weekly, so maybe 1 or 2 day candles we had a close below, but at the end we kind of closed above again. Then here back in 2018 December, you have seen that it has been support a few times in a row, so it is absolutely valid to think that this 200 week EMA should be a valid support, or at least that we see some kind of reaction. Another thing that a lot of people are looking out for is a potential bear flag, and therefore I need to zoom in to the daily, and then I can draw it out for you, where you can see that this was kind of our flag right here, and this was then kind of the pull, and then we take a measured move. Let's be a little bit conservative, we place it approximately here. Then the price target would be 15 to 16,000, and just to make sure that this 200 week EMA is approximately 22,000. Another target could be that 19,900, or let's say $20,000. That is the high from the bull market in 2017. That is my favorite target, as you can see right here, the top of the bull market 2017. Why? It is because once we bust through that level, we once tested it, retested, and then went higher. We never retested the level and then went higher. So we just busted through and then went all the way to that 66k, and then we just never went back. So sometimes I think like Bitcoin has a character. It is like a boomerang. Sometimes it's just even a long time after it needs to come back to a certain level to maybe test it, maybe even test it twice, to say, you know what, now it's support, it's been retested, let's go higher again. That could take a very, very long time, but I would not be surprised. So then we have already the 22,000, then we have the 20,000 of the bull market, and we have approximately 16,000 of this bear flag. Well, if you are using Market Cipher B, then there's another interesting theory that you could follow, and that is to only look on the weekly candles, and then to say, hey, what have we done when the money flow went into the red? Well, if you measure from the moment that the money flow went into the red on the weekly to the lowest point, then you see that we have dropped down another 54%-ish. That is this thing right here. 54% from the moment that the money flow on the weekly went to the red to the deepest point. Now, if we would also show that here, then 54% or 55, 56, don't take me on 1 or 2% more or less, from the moment that the money flow went into the red to, let's say then is the 54, 55, 56%, would come at a level of let me see, that is also approximately 20,500 to 21,000. Not, I would say, a very strong indicator, because this is only the second time, so kind of retesting it right now. Therefore, I think maybe that this horizontal top of 20k is much stronger, much more valid, and the 200 week EMA is also much more valid. But it is something to be aware of, and then we're already seeing that we're kind of getting a small cluster of scenarios that are kind of in the range somewhere between 20 and 25k. Now, if we are looking in the past, and we're looking at what have bear markets done in the past when it comes down to the dumpest percentage, well, then I also like to look in the past, and there I saw a few things. From the weekly high to the weekly low, so I'm not really looking at a day base, but a week, from a weekly high to the weekly low, we have dropped down 86%. And that time that it took from the weekly high to the weekly low was here 406 days. And this is the period 2014-15 till the end, and then the beginning of 2016 where we really went up again. So really 2014-2015, 406 days, 86%. Now, if we're going to the bull market in 2017, there we are seeing, let me take this out of the way, there was the Market Cipher story, from top to bottom, 84% drop from the weekly high to the weekly low, and it took 364 days, so 1 day shy of a year, so let's say a year. So we have 86%, 84%, here we have a bit more than a year, here we have a little bit less than a year. And if we're looking at what we are doing right now, actually I need to extend this a little bit because we just dropped a little bit lower earlier. Then so far we have seen a drop of 68%, and the period, I think I've taken it out, let me quickly put that back, so far is 217 days. So if we look at it historically, then you would say, hey, we still have a bit of a drop to go, percentage wise and time wise. We should be in this bear market a little bit longer, at least let's say approximately another 100 days. That would coincide with a few other scenarios. One of it is sell in May, walk away. What a lot of people are always doing is they're selling all the positions, and usually in June, July, August are like, yeah, and then later on the market picks up again and goes higher. That is approximately 3 months from now, that's approximately 100 days. That would make sense. And I also think if we look in the past, we barely see the scenario where we just completely dump down, that was it, going higher, then bam, we're off to the races. No, usually we need a lot of time to kind of settle down, to retest a few levels, have a few wicks, go higher, trap everyone into long positions, then dumping down again, do that once or twice, and before you know it, it's the end of the summer, and then we could move forward. Will we also drop down 85%? Maybe, maybe not. I have no idea. If we would drop down 85%, we are talking about prices approximately 10k. Now there is an idea about lengthening cycles, which makes sense. That is that every cycle becomes longer and longer because we have more adoption. It becomes harder and more expensive to mine Bitcoin. There is less circulation and there is more liquidity coming into the market. In other words, in the beginning, when Bitcoin was created, we saw the prices actually doing this, and also the amount of Bitcoin that were being mined were doing this, and now it's just less and less and less. So therefore also the volatility in price is getting less over time. And therefore, since the volatility would get less over time in the theory of lengthening cycles, we will also not see maybe a 85% drop. Now again, that's not a guarantee, but it would make sense. So maybe less of a severe drop and a little bit longer period of time of consolidation, as from the moment where we are in right now, 217 days, will most likely or could be extended with another 3 months of just sideways action, what we then call accumulation. So here we have a few price targets between 20 and 25k and why this could go on for a little bit and spook the markets. But if you just take out all of that and just only singly look at the chart and what am I seeing right here, it is a little bit weird, because usually a price or a chart or an asset class, it moves in cycles, and you probably have seen this chart already multiple times, somewhere on the internet or someone's Instagram or whatever, where you see the price going higher, 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 and you really have that blow off top, and everyone thinks this is it, and then we're just dumping down, then we have one bull trap, and then we're just going lower, 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 and then we have a long painful sideways grind, and then we're going up a little bit again, people thinking, we're gonna dump anytime soon, and then suddenly we're just blasting off again and we're going higher. So a little bit more easier draws like this, so the price goes off, we have to take off, then we sell off, people are like, oh no, we're going down, and then no, bullshit, we're going higher, then media start writing about it like, hey, this thing is just pumping up. People are starting to buy in again, then we see these tremendous returns, high percentages, people are getting in, they're thinking this is it, just like in 2017, when everyone says if you're not in, you're going to be stupid, you're going to miss out, last suckers are buying in, we're falling down, people say no worries, we will recover, we have done that all the time, and then we have this last bull trap to trap the last bet of people, and then a complete sell-off to the downside, and then we have that grind sideways. And here you have 3 examples of how that looks. In 1929 we had the stock bubble that was later on then followed by the depression, where the red line you can almost draw it on that chart of the time. Here we have in 2000 the dot-com bubble, almost the exact same story, which is completely blasting off, having a blow off top, going lower, kind of a bull trap, and then just going down again. Here in 2017, Bitcoin blasting off, bull, and then a blow off top, going lower, bull trap, and then just grinding lower. But if we are looking at BTC, we are not seeing that at all. I mean, yes, we went higher, but we don't really have the bull trap where we afterwards we are grinding lower, because this top is higher than this top. And as you can see here, the bull trap is always lower than the previous top, as you can also have seen exactly here on these images. So I have to say, when we topped out here, I was like, this cannot be the top. We went lower, had a painful sideways action, then went higher again, and once we start breaking it, I was like, yep, bull market is still confirmed. We are going higher, and if this is the kind of correction that we need to go through, my targets would really be somewhere 150 or 200k, because usually you see in the end of the bull run that the most of the percentage is being made. So I thought, okay, well, if this is the kind of correction that we can expect, then I expect also very, very, very high prices. But that didn't happen. So once we went lower, I thought, all right, here we go. We just have a little bit of a higher top. We're probably going to have some sideways action, and then we are going higher again. When this happened right here, this period of time right here, I thought, now we are going higher. Then we start dropping lower. For me, that was it. Then I thought, okay, we have to face the fact this is from now on a bear market. We are really making lower highs and lower lows. So this was just one major maybe bear flag, and the bull market is over. Now there is one thing that I quickly want to mention, what I see a lot of people making mistakes with, and that is, are we in a bear market or correction, yada yada yada. A correction is a price dump between 10 and 20%. And a bear market is when we drop lower than 20%. In other words, then we would have a lot of corrections with BTC and also a lot of mini intermediate bull markets. Let me show you what I mean. If you would just take these 2 weeks right here, from the top to the bottom, we had 27% drop. In other words, we had a 2-week bull market, because we would say, you know, from 20% is officially, sorry, a bear market, because of from 20% is officially a bear market. So there you have a 2-week bear market. Then here the drop was 48 to 50%. Also here a 2-week bear market. Very strange actually. Let me see if we have the same here. Yeah, also the same, more than 20% here, then a 3-week bear market. So I think we need to kind of let go of when are we in a correction or bear market, because we all know that crypto is much more volatile than traditional assets or maybe commodity stocks or whatever. So this thing just moves much more up and down, and therefore we have much more corrections and bear markets and bull markets. Because if we now would pump up from this level 20% to, let's say, 25k, we officially are again in the bull market. So that's a little bit weird. When we talk about market cycles, then I think a great example here is the S&P 500, where we said, you know what, this is the runoff in 2007. Then we had a credit crisis, went down. This could be kind of your bull trap, and then we are going lower. In the dot-com bubble 2000, kind of the same. We are going higher, lower, bull trap, and then going lower. You could also maybe say this is the bull trap, but let's draw it like this. One thing that I noticed when I start looking at the charts and kind of at the macro level where we are right now, look at this. We're having a high, then we're having a little bit of a higher high here. This is again the 2000.com. This is the credit crisis. Lower, and this one was a little bit lower than this low right here. Let me go back to BTC. This looks almost exactly the same. We have a top, we have a high that's a little bit higher. Again, a top, a high that's a little bit higher, and then we're having a low here, and then we're having a low here, and then we're having one that's a little bit lower, and then we're having one that's a little bit lower. So this is very interesting to see that BTC is kind of now mimicking the price action that we have seen in the beginning of 2000s until let's say 2010-ish. Now of course then we had the major money printing, and then the chart looks completely different. But also here we could say, you know what, let's say this thing also goes much more down. Again, the exact same scenario. We're going higher. We're having a bull trap right here, and then we're just going lower at whatever level it then eventually may be. So markets always move in cycles, but so far, because I was really looking at those cycles, I just, you know, in hindsight could not really say, this was then the bull trap and now we are going lower. because that was just so hard to distinguish, because I really was expecting a absolute blow off top, lower bull trap and then lower, but like I said, that just didn't happen, so that is very, very strange. So to summarize once again, is this the bottom? I have absolutely no idea. We could go much lower, but we have a lot of confluence here between 20 and 25k. I do also expect that a lot of people would have buying orders between 10 and 20k. They will see it as extreme discount. Then you just see a lot of buying orders coming up. So if we would break lower than 20k, I do not expect that we will maybe range bound there for weeks in a row. I think there will be a lot of people taking the opportunity to start buying. The actual bottom could of course be lower, like I said, maybe 10k or spike down, we don't know. But if I'm looking at the setup of the charts right now and how the bulls are just not able to step in every time, this looks like it needs much more time to consolidate. A few other things that are having a major negative effect on Bitcoin is that Bitcoin is very kind of a sensitive asset. It's almost like a little kid. It really listens to the outside world. What do I mean with this? If the traditional markets dump, then a lot of times we see Bitcoin also dumping down. If the dollar index pumps, then we a lot of times see Bitcoin dumping down. And now with the central banks just rising the interest rates, we are seeing that just this major sell-off in all these markets, and it doesn't look like they are going to quit rising the interest rates anytime soon. Matter of fact, they even might gear it up. So at least until December 2022, I think they will keep on rising the interest rates, and we'll have to see what's then for next year. So in that daylight, it looks like that BTC has much more time ahead of it to have maybe like a downwards to sidewards market, and I don't think a new bull run is around the corner anytime soon. And then of course we have one more other thing, and I always call them kind of the system cluster fucks, you want to call them, or system failures, as in where we see major projects or major events having its effect on the crypto space, and that is stuff like Celsius or Luna. You know, with Luna, the whole terrible thing, I don't have to explain to you again, went down, and it just was an extra push for BTC and the rest of the market downwards. And now we're having the whole thing with Celsius. Also, this is just a kind of a big event and will push the price further down. So as long as we kind of still have these kind of system problems where we have major flaws and major bankruptcies and no one can take out the money and whatever, I'm afraid that the adoption goes much slower than we think. We have much lower prices. That 100k yippee-ki-yay is much further and longer off than we think. If we cannot fix this as a community, if we cannot overcome these kinds of stupid problems, and then we look in hindsight like, oh my god, he ran off with all the money, and then we think if we just have kind of regulated that more, then that would not have happened, for example with Luna. So there is still macro a lot of stuff for us as a community to work on. There is still so much danger everywhere. There is so many factors that we cannot influence, again, like the central banks. Maybe there will be new wars, we have no idea. So to say we are going to hit 100k very soon, I think absolutely this year out the window, next year out the window, maybe 2024 when we see something like it happening again. But to be honest, I don't see it anytime soon. For me now it's just trading on a day base and DCAing my way in, and I'm looking out for next 5 to 10 years. So that is for me the major thing. Alright guys, that was it. A little bit of a different video, a little bit longer. I hope that you like this kind of stuff where we look at much more the broader picture and a little bit of different indicators. If you do, then show your appreciation by liking, subscribing, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful. Also, feel free to check out the links in the description. There are links to my Twitter and Instagram. Feel free to follow me there. I post multiple times per day on Twitter. And also, you can join now, Bybit and Phoenix with a deposit bonus we have nowadays. So if you then use the link in our description, after your initial deposit, you're getting a trading bonus from these exchanges. So feel free to check that out. Last but not least, thank you guys so much. I love you all. I really appreciate all of you, and I see you very soon again in the next one. Thank you so much. Bye bye.